Welcome to the Cashflow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project Podcast. I'm your host, Steve Fieros with Tri-City Equity Group. Today, we're excited. We've got Darin Davis on the show. So Darren's an entrepreneur with more than 20 years of real estate experience and over $1 billion in sponsored projects. Hey guys, that's an impressive number. You don't get to that number with just a flash in the pan. Having gone through several major market shifts in the last 2 decades, Darren, he's led predecessor companies to pivot and delivered exceptional returns in multifamily assets while possessing niche expertise in public-private partnerships. He's also co-founded Club Capital and is responsible for equity investments, partnerships, relationships, business development, capital raising, investor relations, and marketing. In 2023, he also launched the Never Quit Initiative. It's a 501c3 nonprofit organization that provides housing support to families facing cancer-related challenges and those that have lost a parent to cancer. Hey, Darren, welcome to the show.
Hello, Steve. Good to see you.
Yeah, no, I appreciate you jumping on with me and for our audience. And I know we'll have a great conversation and looking forward to it and providing value to all of our listeners.
Well, yeah. And just knowing that you're from Hawaii, I started smiling. I was going, I wish I could be there. So that's exciting for that alone. So no, let's make some hay today.
Yeah. Well, for those of our listeners that may not be familiar with you and kind of maybe projects or just what you've done in the industry, fill us in, give us a little bit of your backstory and how you got started in the business and real estate and investing in general.
Yeah, I'll kind of break it into thirds here. And I'm probably not very different than a lot of other people. I think it's just some of the actions that I took in that kind of third chapter of my life. But I grew up very middle class. Dad was Marines and then Marine Corps. Mom was a teacher. And they grew their careers. And I just saw, I had a great childhood, high school, college, all that. Then the next chapter of my life, I went into and I realized that I didn't really have, any degree that was real specific, like architecture, engineering, medical, all that. And you go into sales and marketing and business, general business back then. So that's what I did. I really went into the sales and marketing and I excelled there and I was happy there and I made a lot of money and I could never complain about the opportunities that I had, but I seized them. Every time I think I had an opportunity, I said, just take action, go. Well, fast forward to, I was probably 35, 36 at the time, living out in California and San Francisco. And this is back in the mid to late 90s. And I mean, we had the .com was evolving. Okay. There was money flying everywhere. And we thought we were big time investors. We thought we were the smartest people out there. Well, we all know what happened to the .com. But what really happened for me directly is that I was 35, 36, but I was working Monday to Friday and I was raising capital, selling in that kind of bubble out there in Silicon Valley. And again, I can't complain, but I think what happened is my father unexpectedly passed away, made me think, whoa, he's only 57. Okay. At the time, 57, right? And then 9 months later, my grandfather passes and he was 84, 85 and he'd had a good life. But I just stepped back. I go, what am I doing? I'm not in control of anything other than my party life because I had money and I was single. And I literally said, I got to do something different. And at the time, Steve, I didn't know what different was. I had no idea, but I knew I didn't want to go Monday through Friday and have that financial pressure on me 24/7. It felt like it, even on the weekends. So I just started looking around. I think like most of us, when we buy a car, we've never seen that car, but when we buy it, we see 100 of them of the exact same color. Well, I just opened my mind, opened my ears, opened my brain, eyes, everything. And I started looking around and I landed on commercial real estate. And back then there wasn't the internet. Netscape had just come out, but nobody really believed in the internet. But Netscape, all those guys made millions. But there were still books on tape and there was still AM radio and there was still Amazon had just started. So you could actually order a book online. So it really was a very basic self-taught thing that I did. And it just started growing. And that's the three kind of chapters of my life. And that's where it started. And now fast forward again to chapter, I guess we'll call 4.5, maybe 5. I'm at probably the tail end of my kind of hardworking days, but everything that I've done for the last 20 years has brought me to a point where I'm in control now. And I look at the next part of my life is let's go have more fun, because the control just kind of happens based off of what I've done over the last 20 years.
Yeah, no, for sure. Yeah, that's great. And I love talking to people who've had experience, let's say, through different market cycles, and it hasn't all just been rainbows and sunshine. Because if you talk to anybody that's been in the business, let's say the last decade, we've had super cheap money. They really haven't. Money's been easy. It's been easy liquidity, low interest rates. Like there really haven't been that too many challenges up until very recently, right? So you get kind of caught in that mindset potentially of, well, it's always going to be like this, right? So I love talking to people who kind of, all right, hey, we've been on a little bit of that roller coaster ride. You've had the opportunity to pivot, let's say within your career, or for you, also like your mindset. To me, the mindset shift is huge. That's a massive thing. And you mentioned, hey, this is the early days of tech and the internet and that kind of. There's guys, for all of our listeners out there, it's never been easier to access information. You can listen to a podcast like we're having right here. You can hop onto YouTube. There's so much information out there. There really is no excuse. If you want to learn something, I can guarantee you there's 20 people who have written books out there, if not more. Or you can go find a YouTube channel or a conversation and then just start plugging in and learning. If you're not happy with the life that you have, you can do what Darren did, right? Like he looked at his life and did a reevaluation and said, hey, man, I got to make some changes here.
Let me tell you how bad it was. I used to go sit in my car on Sunday afternoons and listen to the radio, AM radio, because it was the only place I could get my education for the weekend. So that's pretty sad. But I mean, that's the access I had to the information I was seeking at the time, because these people hadn't written books yet, and they were on the forefront of some of this educational information, but they were just now starting to get content out there. And one of the biggest ways to do it was radio, TV, or publish. And publishers weren't just taking anybody off the street. Now you and I can self-publish with an AI app and a friend in an hour. So it's far different.
Right. Well, I want to dive in a little bit into, we had some conversation offline about this, but how kind of seeing that loss, let's say through your family and kind of, if that was more of a wake up call where you did have to kind of like, yeah, I'm going to switch gears here. I lost my dad a few years ago. And I got to tell you, as I've gotten older, like that really starts to kind of put in the forefront of your mind, like, hey, you know what? The time is ticking. I'm not in my 20s anymore where I'm going to live forever. Right. And I've got another 60 years or whatever, however much time you think you have. It's like, no, I've got to be much more mindful of my time. And it sounds like you jumped in, you took action. And can you tell us a little bit, was that more of a mindset shift, or was it like, hey, no, I got to redevelop a skill set here and kind of switch gears?
Well, kind of like anything. I mean, you don't typically make significant changes in life until the penny is unbearable. Okay. And that's in anything. That's with a 5-year-old kid or a 50-year-old, or you typically take actions and you know what, say, I'm not going back there. That was too painful to me, my family, my spouse, whatever it may be. Okay. And I'm very much an action oriented person. Sometimes, I mean, we've all heard this. I shoot first and aim later. You know what? It's served me well. Have I failed numerous times? Absolutely. Was it painful? Absolutely. It was painful. Did I learn something? Absolutely. I said, I'm not ever doing that again. So I learned quite a bit, but I think the mindset is that when I looked around and I saw, okay, I'm 37. Okay. I'm 38. I'm really not in a relationship that could go to the next level because I'm always traveling or there was no focus on my personal life. And then I started thinking, if my dad passed away at 57 and I'm now 37, that I start thinking about, okay, what's in my life for me to do? And I literally just said, I just can't do this anymore. And again, I don't regret it at all, but I started thinking about my life and my relationships and where were they? How were they growing? How was I building? I mean, most of my friends by this time had kids in middle school. And I was a crazy Uncle Darren that would sleep on the couch, that would come over. And I was going, I don't want to be that guy anymore. I want to start focusing on other things. But I also knew that I had a huge appetite for spending. Okay.
Mm.
Because I was taught that for 10 years because I made great money. I was super happy in that area, but I had a lifestyle that I'd become accustomed to. I had expenses that I was going to spend. And so I just had to figure out what to do. And we'll get into it here in a second, but it was painful for about 5 years. It really was.
Mm.
And it took me about 5 years of trial and error to figure out what I could do well, what I didn't never want to do again, how relationships and the person you do business with is bigger than the deal you're doing.
Mm.
I think we all know that after one bad partner. Okay. The greatest deal in the world could be sabotaged in 1 second by the wrong person in the deal. But it was just one of those where I pivoted, and I'll tell everybody this. It's not rosy. If it's rosy for you when you pivot and you never have a hard time, and maybe you kind of mentioning money was so cheap for 10 years, most anybody that got into our space was successful. But it wait until you get punched in the nose, like Mike Tyson said. You can prepare for a fight all day long and you're ready to go in there, but until you take that pain punch in the nose, then you learn something. And I guess I would say, God, I mean, from the .com to the Y2K to 9/11 to, I mean, my list of setbacks in the market and the economy goes on and on and on, and we're still going to see them. It's not like this is going to stop today. So you just have to get used to being able to adapt, change, and pivot.
Yeah, no, for sure. And for those of our listeners and me, if you're just starting out, just like what Darren's talking about, either you want to partner with somebody who has had some experience doing that, or that you can glean from, let's say, wisdom. Because when you first get started, again, like, you can do nothing wrong. Now, take action. Like, don't get stuck in analysis paralysis, but have some foresight to be able to gain some wisdom from somebody who can help you to navigate potential pitfalls and whatnot, because it's not always going to be all rainbows and sunshine, right? I mean, we want the help of those who are a little bit further ahead of us to help us kind of navigate that. And so having these conversations like this and networking or listening or reading people who have had some life experience, I think is absolutely critical. It's vital. It's like, well, what would you tell yourself from the younger you, right? Like, it's one of those things, right? Like, just be able to offer some advice and some help to the person coming up.
Well, and I've got a 20-year-old and an 18-year-old. Okay. And they're at that point where they still kind of listen to me. And if I can share with them little nuggets of information, I set up every other week Zoom call. They're both in college at different schools. And I make those guys teach me one thing every other day, every other week. I mean, every Wednesday, every other week. And I make them teach me one thing. I said, you've got 2 weeks to go learn something to teach Dad, because when they're teaching me and they're doing something, what did you try different? Okay. What class did you like stretch yourself in? And it's not all real estate. It's not all investing. You talked about it at the beginning. It's a mindset. It's how do you emotionally get there? And starting small, whether you're 20 or 30 or 40, starting small is okay, but start.
Oh yeah. 100%. Yeah. You definitely got to get started. If you're listening in and have been on the fence, that's okay. If this is a new thing, right? If you've been on the fence for 10 years, you're missing out. You're missing out on the opportunities to grow. Just like there's talking about, when I look back on my own personal life and investing career, basically every time you want to level up, there's going to be those challenges, right? You're going to go through that pain. You got to push through the pain, because all of the growth is just waiting on the other side. So you've got to make some personal decisions, take some action, and keep going. But yeah, don't stay on the fence, right? Like, you got to get going.
You're training your mind, body, and soul to grow. Okay.
Mm-hmm.
I'm 60. Okay. I can't wait to go learn something new. I mean, I'm not done. I can't wait. I'm done with, I say chapters, and earlier I was saying chapters. Those are growth chapters for me. How do I get one better? So it's just grow. Here's something I used to say a lot. And you talked about it if you're sitting on the fence for 10 years, if you're sitting on the fence for 10 years, you're going to be sitting on the fence for the next 20. So you might as well turn the podcast off. All right. But the thing that I used to say, and you probably heard this, but education without execution is just entertainment. So you can educate or you can educate, then execute and learn something. Now you're somewhere. So
Yeah, no, for sure. I actually heard a really good quote too. That's somewhat related. That's basically like if you're not a creator, you're a critic. And so it's like if you're going to sit around and you'd like to criticize the other people. Well, I'm not Darren. I don't have I haven't had a successful career and made lots of money and been in tech startups or whatever in the tech field and real estate and all that kind of stuff. Or I can't be like those guys. Look, you're either criticizing or you're going to go out and create something for yourself. Like we're here to help try to provide value to you guys as listeners. And so, yeah, that would be the hope is if you're watching and you're tuning in and you're listening, then please like take the encouragement, go take some action. Neither of us has gotten to where we are by sitting on the sidelines and not jumping in. So, but go out, create something. That's always the key. Well, I want to switch gears a little bit. I know you got a lot of experience. I mean, having had $1 billion worth of successful sponsored projects. I mean, that's incredibly impressive. I'm curious, obviously you would have had to navigate those waters over the years. How are you factoring that into like, let's say modern day to current operations? A lot of us have been dealing with okay, rising insurance costs. We were just talking about the Maui fires, right? Now that's affected things, but so do the California wildfires and so do Florida storms and all that kind of stuff. So all of this is kind of factored into rising costs, let's say for insurance, property taxes, where we both have property there in Texas, but that's in multiple markets as well. How are you guys navigating those waters through, like, let's say underwriting or operations? Any tips you can give us to our investors?
yeah, and I don't know if it's a tip, but it's reality. And what happens is kind of like when you have politicians say we're going to tax big corporations. They're going to pay their fair share. And I just sit back and I laugh. And I know your audience knows this, but the corporations aren't paying the taxes. They're going to, over time, they'll pass it down. It's not going to be sticker shock day one. They're not going to go, okay, we've got to pass down $200 billion in taxes this year, tomorrow, to our entire consumer base. They don't do that. It's a gradual, we don't realize it. We see costs going up slightly, a few here, a few there. Before you know it, you look back 5-10 years, you're going, holy cow, my rent just doubled in 10 years. Well, inflation per the government didn't double, but everything else did. Well, that's just money. We're operators. We have to pass the cost through. And we just try to continually sharpen our pencils and create other value propositions on the property that could be perceived money savers. Okay. Like a gym. Okay. You don't have to pay a gym membership. Well, most people probably have a gym at the property. And I wouldn't be surprised if 20-30% go to Lifetime Fitness as well for that social engagement. So you can do all that, but it's competition. I'm a big fan of competition, and those costs over time, not one day, 1 year, 2 or 3 years, they're going to get passed along. And we've seen that. And here's what we've seen. And I think this is pretty obvious. And I don't have the numbers right in front of me, but I want to say 20, oh man, I think 25 years ago, in income and your income was keeping up with housing. Okay. They were running pretty parallel to each other. Over the last 25 years, you've seen housing costs go way up as part of income. And one of the numbers we have here in Texas that you guys deal with is that you can rent a home for $1,300 cheaper per month than you can own one. And when you think about $1,300 renting, where I don't have to come up with that 20% down payment, but all the other expenses are involved in there, you kind of start thinking, wait a second, I can't afford a home. So you're going to be staying in the rental pool more on that. And those costs keep going up for housing, and housing income is not keeping up with the cost of housing. That spread's getting bigger. So there's all different ways to manipulate the monies. And it's just to your point, taxes and insurance, they're big ones. Now, one thing we're doing in Texas, which you may be aware of, because you guys have a lot of property here, is that the state of Texas, with a lot of other states, have realized there's a significant housing shortage. And we had this really big migration through the pandemic, which it's not as big, but we were receiving, I think our net migration was 4%, which is, hundreds of thousands of people coming into Texas. we were already had a housing shortage. Okay.
Mhm.
Well, one thing we've done, and I bet you do in Hawaii too, we have the government, the city or state, in our case, state, they will do a public-private partnership and they will help you with property taxes. And in some cases, you have a 100% exemption on your property taxes, which is the largest expense after payroll on a multifamily property. Well, in exchange for that, we have to provide a certain level of affordability. Now, everybody still has to qualify. It's not like a voucher system on a Section A. People still have to income qualify, but their incomes can be lower. And that's one way we have in our group, personally, we like that model because we are providing affordability and we're capping our property taxes at zero. So when you cap that expense at zero, and then your median family income over time continues to rise, you can see the spread in that. And you'll start, it's not for the investor, it's not a home run in the first 3 years, but go out 5, 6, 7 years, and that spread starts getting bigger and bigger because median family income, which is the benchmark or of where the prices can go on the rents, that does increase over time, just like CPI and inflation and everything else.
Yeah. So it's getting you some time. Well, plus it also too, like it's taking out, like you said, right? Like that one of the biggest expenses that you're going to deal with as an operator. And yeah, they have some incentives here in Hawaii for like that, just because the costs are so high. And again, we're kind of talk a little bit back about some of the taxes. This is part of what's written into the tax code, guys. So yeah, you mentioned that about the politicians earlier, talking about, well, the taxes and all this kind of stuff. Guys, they incentivize business owners and us as in the private sector to do the things that they don't want to do, or they know that we're better at, by having those tax incentives. So I always think it's a joke whenever they talk about, well, they're not paying their fair share. They're creating value. They're creating jobs. Like it's hilarious.
Anybody on here that's a private investor or an entrepreneur or small business owner, you're creating more jobs, more value, paying more taxes than your politicians will lead you to believe. Okay. So 90% of the people going to listen to this are one of those three people. And they're creating a tremendous amount of value, and they're paying more than their fair share because they're contributing. They're absolutely contributing. So I would encourage everybody, don't worry about the federal level and all the hype. Take care of what you can control in your local market. And sometimes you put the blinders on and say, what, I can control this zip code, this state, this community, this type of product, this type of investment, and just stay laser focused on that. And you'll do well. Like you said, the government wants to help you. Let them help you. Okay. They want to loan you money. They want to have you provide affordable housing. They're going to give you grants and tax incentives and all that. They're out there. You just got to figure out how to go get them. And they're all out there. And there's people out there that live in that world and do quite well.
Yeah. It's funny because it's like, I can't help but to think about the Pareto principle, right? Like the 80-20 rule. It's like, well, man, these politicians, I got to give them credit for that. They have to do this balancing act where it's like, well, the 20% is their tax base, really, because we're the ones that are creating the jobs and the opportunities. So it's like, well, they got to keep us as business owners, they got to give us the tools to go out and do what we need to provide the opportunity to the 80% who are the ones who are actually doing the work, paying the taxes and whatnot. So it's like, well, they got to say the rhetoric, whatever they got to do to get into office, but they really have to appease the people creating the opportunities to begin with. So yeah, I won't give them credit for much, but at least in how they need to balance out that messaging, I think it's pretty funny. Or
They're professionals. Dude, for sure.
Yeah, for sure. Well, I want to transition a little bit too. I do want to highlight, I know you've got the nonprofit that you did set up. For me, it's always about, we talk a lot about people in the entrepreneur space that you've got to have a why, right? For doing the things that you do, right? It can't just be about the money, guys. If you're in it solely to make the money, great. That'll keep you going for a while. But at the end of the day, you're going to want to do, if you're successful, you're going to want to do more with the resources that you have, right? You want to find ways to give back, right? Like we're on this show today because we want to be able to give back, right? Like this is us providing value. We don't have to do this. Darren doesn't have to take time out of his day, out of his house there, and he's in Austin. He can go grab some brisket and go enjoy
Barbecue. Yes.
He doesn't have to take time out of his day to have a conversation with me to share in his experience. So we find different ways to give back. And one of the ways that Darren has done is through a nonprofit. And so talk a little bit about that and kind of see how that got started and kind of the impetus behind that.
I'll tell you what, I backed into it, and not in a positive way, but that's what we're going to do. We're going to flip it and make it positive. So I'll share this with your group. And I think there's nothing more that, and I'm speaking from a male perspective, there's nothing more than you can do to be a hero to your family. Okay. I'm adamant about taking care of your family. I purposely tried to do as much stay at home stuff as I could. I didn't go golf every weekend. I wanted to be that present father at the beginning. That's just, I wanted to be that. But I'm going to give you a statistic real quick I think that's something super important. Well, let me back up. I'll start the story. So my wife and I were both out in Silicon Valley, living in San Francisco, downtown San Francisco. We're just having a blast. And when we decided after we met, hey, we're going to get married, have kids, we decided that we're both from Texas. So we're going to come back to Texas. And we did. And we both agreed we like this whole real estate thing. We don't know what the hell we're going to do. We'll figure it out. And we got lucky. We knocked on a lot of doors, and we met a couple of, I didn't even know what a syndication was. I thought, oh shit, this sounds like I'm going to get murdered tomorrow. But I met a couple of guys doing it. And one guy particularly, I give him a ton of credit for allowing me to participate. And all he said was, well, if you can raise money, then yeah, I'll make you part of the GP. And this all sounds good. So I have friends that have money. So started that process. And what we quickly realized, my wife and I at the time, is that our whole thing was we wanted the catchphrase of the century, financial freedom. Okay. And we were convinced that if we leveraged real estate and leveraged our relationships and all that, we could do it. Well, like I told you, the first 5 years are pretty rough. Well, the next 5 years, it started to click. And we started seeing, wow, it's working. We've got passive cash flow. We're having our second kid. She's not going to work anymore. We have enough money to support the family. And I said, wow, if we do this for another 10 or 15 years at this clip, I'll be done. If I want to be done at 55 years of age, let's say 55 ish. Okay. And I could, if she can stay home mom and all that. Well, we were on that path, and it was clear we were on that path. And then life throws you a curveball. And she was diagnosed with cancer. And the sad part of this is that we went to multiple doctors and nobody could figure out what was really wrong with her, because she was young, organic, didn't drink, didn't have any family history. So nobody, including me, thought cancer. We thought all different things. But it was, by the time we diagnosed it, it was stage 4, and they gave her 2 to 6 months. And we immediately went into, this is where people tell me, I don't really remember a ton of this back the first year. They said, I went into superhuman space, and I just started doing everything I could, calling everybody I could, researching everything I could. Well, what we found out going through that process, and this is where I really want to talk to people and really hear this story, is that as we started getting treatment, I started realizing the doctors were not prescribing her treatment. The insurance companies were. And I would walk into these treatment centers and all this, and I quickly realized that the people in here only had insurance and were being managed by the insurance companies and not the physicians. And that didn't take me that long to figure it out, because I felt like I was walking into an episode of Walking Dead, it was the saddest thing I've ever seen. I immediately said, I've got to do something different. So we pivoted out of our local group here and headed over to MD Anderson. And I fought my way through MD Anderson, and we got in there. World-class facilities, research facilities. Most everybody in the US knows of them. One of the top 3, if not number 1. But what I realized quickly, and they told me, they said, your insurance is not going to cover a lot of this. Okay. And a lot of this is going to be out of your pocket if you want to do this clinical trial, this clinical trial, that. Well, we went from 2 to 6 months life expectancy to 4+ years. Right. And we had the passive cash flow to pay for this. I immediately went to the doctors and I said, I don't care what the insurance says. We're doing your protocol, not theirs. And that flipped everything on its head. Mm-hmm. Now, the reason I tell you this is because we didn't realize what we were doing the 10 years before that would provide us enough cash to live on and treatment and keep her alive another 4.5 years so that she can spend those times with her kids, right?
Mhm.
Kids were in middle school then. Most all this is going on. And the stat that I want to share with people is that anybody listening to this, if I go to a group and I speak in front of a small group of a couple hundred people or something, you usually can look out in the audience and I can kind of tell the general age. There's a lot of 30s, 40s, and 50s in there looking for that next chapter of their life. But in that age group, 10% of those people in that group have gone through my story. Okay. And statistically, they've gone through my story. Fast forward to you being 60 years of age. All right. 50% of the people have gone through my story. So everybody in there that's approaching 60, half of them are going to deal with what I dealt with and my wife dealt with 5 years ago. And I look at people and I say, if you do nothing better, then that never happens to you. And I pray that it never does to anybody. But if you set up that passive cash flow, and for some reason you have to go take care of a loved one, a parent, a child, a spouse, and you have to leave the workforce for a year or 2 or 3, and you need money coming in, it saved our lives. It hands down saved our lives. And I'll end with this, Steve. There was a couple that was about our age that we were in treatment facilities with, and we ended up being about on the same schedule. Their kids were slightly older, a couple of years, not much, but you could hear in the conversations and we'd kind of chat with them a little bit. But as we got to know these people over about a 8 or 9 month period, because you're doing these treatments like weekly, found out that all they had was their company insurance. Okay. Mm-hmm. And the company insurance was only going to pay for X, Y, and Z. And it was the saddest thing because she lost her job, then he lost his job, and then she passes away. And then those kids are in high school. And I was just like, there couldn't be anything more devastating. And I sat there right next to these people and we had a whole different treatment. We had a whole different protocol. They didn't. And I saw it firsthand what happened. And we didn't plan for it. We didn't know it was going to happen. We planned for something else, but all it took was my ability to stay connected with my wife and kids, not having to go to work every day, and us having money coming in. So I got on a long diatribe there, but it's when it's life and death and it's your loved ones. That's the hero to your family and I say this, I'll end with this. I know I need to shut up, but I'm pretty passionate about it. Successful things, successful people, or success in general favors preparation. Okay. You're not always going to need that preparation. You're going to get lucky a few times, but I mean, more often than not, that successful outcome was because you prepared in some way, knowing or unknowing, but you were doing something that got you there. So I'll take a time out and breathe.
Yeah. No, I mean, I actually think that's a very powerful question. And again, it depends on who you are as a listener, right? Like if you're just kind of starting out your career, maybe this doesn't ring so true, but ring so relevant rather. But as you continue along, and I think a lot of our listeners would be a little further along in their career and they're tuning in. I think that's a great question to ask. Like, could you realistically take off a year, let's say, if you were to go through like that health challenge through a loved one? Maybe this is a parent, right? Like, do you have the resources to be able to do that? Right? Can you take time away? Would you like to be able to do that? Right? Like, I think that's a great question to be able to ask yourself. It's just a reality check. Like, are we in a position to be able to do that? And most people won't. I know for sure, like medical bills is like, I think it's the number one cause for like financial hardship, especially like,
yep, you're right.
Yep. And so it's like, man, wow. Like, so if you can, like Darren's saying, right? Like, if you can have some resources just to weather that storm, or in the case for you and your wife, like, can we have some options that aren't going to be covered by the insurance, right? To buy them more time, right? To have one more quality, and who knows what happens with that, right? Like maybe there's something that life-changing comes available, right? You just want to have more resources. You want to have more options is what it is. And so I think it's a great question to ask. Can you actually take time off? Like if some kind of traumatic event were to happen, do you have the resources to be able to do it?
The question is not can you, but if you have to, could you? Because then it deepens it a little bit more to say, if you had to take off a year to take care of your spouse or your child, could you do it? And what would that, because that's why I talk about a hero's journey. You're not planning to be a hero, but by God, if that ever comes to you, you are unknowingly, unassumable. You are, because I remember my wife saying to me before she passed, she goes, my God, Darren, we couldn't have done it without you. And I was like, no, not me, but you, because she went through it all. So I told you I wouldn't get emotional. I'm going to stop right there. Okay.
Yeah.
So,
No. Thank you for sharing. I really appreciate you sharing. So, and we'll make sure that we leave, in the show notes, a place where you can go and kind of check out the Never Quit initiative, Darren's initiative there for the nonprofit. So, well, I want to switch gears a little bit here to what we call our fire round. So just a little bit more kind of brief, a little lighter, maybe Q&A, just something a little bit more fun. We'll end on a little bit lighter note. Is that something you're up for?
fire away. I don't even know what your questions are, so I'm ready. Radar's
All
out.
right. All right. First question. What is the best book that you recommend? Other than, I know you've read Rich Dad, Poor Dad. I know that was pivotal for you and for a lot of us real estate investors, but outside of the Purple Bible, what's your favorite book recommendation?
I'm going to give you two, and they're not so much that they're real estate related, because they're not. Okay. They're around focus and relationships, because that's just where I am in my life. There's a book that Gary Kelleher wrote called The One Thing, and in keeping it simple and not trying to conquer multiple mountains and focusing on one thing, you will be so much more successful if you're a master of one than juggling 15 balls and trying to do everything for everybody. And there's no guilt in saying no. Okay. So I think the one thing, just, I like the focus. What are you good at? Let's focus on this one thing as an individual, a team, a family, whatever it is, and conquer that before you start adding other things on to your list. So I think it level sets really well. And another one, friend of mine just published, I just read it last week. It's guy Alex Bain, and it's called Factory for Good. And what it is there's going to be a handful, or hopefully a lot more than a handful of people that are in this position. But as you start seeing your wealth grow, the way you handle money inside and outside of your family, of you personally, it will devastate a family or an individual, or you can set it up to grow. Okay. And a couple of the things that are in there that I want people to recognize is I'm at the point where I have an 18 and a 20-year-old, and they're coming into their own about finances and the cost of college and a car and just all that stuff. Well, I want them to understand that it's a responsibility that money management is. Dad's not always going to be there. Okay. To be a safety net. And I gradually am pulling farther and farther and farther away as a safety net. And it gives great examples on how to do it, what to do, when to do, if your child is like this and like that. And a lot of people in here, I just think there's a lot of kids that have probably not been as challenged financially because they've had such a good last 10, 15 years. I mean, that's a long time to grow up in a very prosperous economy and only see positive. The other thing that I think is very, very fascinating in that book is it talks about when wealth is transferred, more families are broken up by the transfer of wealth. It's not properly liquidated or distributed in detail. Families fight, break up, they never talk to each other. And I can't think of a worse way to end a family relationship with siblings, spouses, parents, aunts, uncles, than the structure of the family business was not correctly set up. And there's some small stuff in there too. It didn't have to be like a $500 million estate that's trickling down, but it talks about how to actually, people get over how they can actually think about how they set up on their passing, the trusts and the wills and the distributions. And they give Alex gives great examples, interviewed, maybe 100 people or so of wealthy people and moderate, and there's everything. But there's some great stories in there, and there's some exercises in there about how to start talking about money with your kids. And so those are my two. I like staying laser focused. I really like get focused on one thing, because I was the guy that had squirrels running everywhere for years. I said, what am I doing? I said, I'm doing nothing except chasing squirrels. And then I think Alex's book really breaks down a couple of key things that I'm personally in tune with. And there's a lot of good stuff in there. So Factory for Good and The One Thing.
Yeah, I love that. I've never, yeah.
The only thing.
So you said that was a new one. It's the one thing. Yeah. That's a great book, Gary Keller. I always think he didn't have the quote in the book that I can remember, but it always makes me think, well, every yes is a no to something else. And so it's like, well, what are you saying yes to?
Like that.
And I'll definitely have to check out that Factory for Good. You said it's a new book. So yeah, I love
weeks. Yeah.
Okay. Awesome. That definitely sounds good, because having young kids myself, that's something I think about frequently. And how do we pass that information, that knowledge onto them? Very good. All right. Next question. What would you consider your superpower to be? Told you they'd be a little lighter, a little more fun.
My superpower, I don't quit. I don't quit. Yeah. I kind of take it as a badge of honor that you throw something at me, and if I say I'm going to do it, it's going to get done. I'm very in tune with, I'm maybe too much so, but with the investors in our company, if I'm given the challenge to do something on an asset or an opportunity, I run it to the end. I don't stop halfway through it. So that's I guess would be my superpower.
Yeah, no, very good. And that it's definitely a superpower. That's really good. All right. And next question, for the busy working professional, somebody who's working towards financial freedom, what advice would you have for them?
I would say go in your 20s and maybe 30s, go fail as much as you can. There's nothing better than getting a punch in the nose. And if you can't accept failure, you're in the wrong. You're not an entrepreneur. You're not an investor. If you want to stay out of the failure world and blame it on somebody else, then yeah, you go to the stock market. But if you really want to change something, and I got to tell you, what I've admired the most over the last probably 10 or 15 years is those people that started businesses, right? That actually started a business, and I mean, blood, sweat, and tears for 5, 10, 15 years. And now they're exiting at 50 million, 100 million, 150. And it sucked for 10 years, maybe 15. But they could afford to make mistakes. They could afford to fail. But those guys, to me, if you can find one of those guys to hang out with, somebody that started their own business and is in the top of that or growing, I'm just amazed. I never really started a business, even though we have a business of what we do. We invest. I'm not building, I'm helping people build some wealth. Okay. And which is good, but I'm not building a revenue generating business where I'm going to sell it for 10X, sending on your syndication, your database for 10X. So I really admire those people. So.
Yeah, no, for sure. Yeah. This is a common reoccurring theme. I'd say just about every guest that we have on that has achieved some form of financial success or success in their life in general, that's a reoccurring theme. They fail forward. Like they weren't afraid to try. They weren't afraid to fail. And I can't reiterate that enough for those of our listeners. Yeah. Don't be afraid. You gotta get off the fence. You gotta try. I gotta take some action.
There's a Jerry Seinfeld episode for all you guys that are old enough to know Jerry Seinfeld, but he's looking for a girlfriend. Okay. And in the episode, someone, I think Kramer tells him, well, you're going to have to date 10 girls before you find one. So he sprints out and gets a date and it doesn't go good. And he sprints out and gets another date. It doesn't go good. And he goes, I only have 8 more to go. And so the whole show is him dating and breaking up. So it was a pretty clever thing about you're going to have to go fail 9 times before number 10 is the woman. So it was a pretty funny episode.
I know. And it's easy for us to say, guys, I totally get it. I totally understand. A big part of it is a mindset, but it will always boil down to like a numbers game, right? It's just like, hey, look, you know what? The more often you try, there's always going to be the opportunity for failure, but you're going to learn, you're going to take away from that. And you have the potential that some of that does not fail and you do succeed. And you would never have known if you didn't get out there and try. Well, Darren, it's been a pleasure having you on the show. If our audience wants to reach out to you, they want to know more about your operations, they want to know more about your nonprofit, what's the best way for them to connect with you and get in touch with you?
Yeah. So our company is yeah, sure. Go again. Clubcapital.co, just like it sounds. The nonprofit is Never Quit Initiative, and it's real simple. It's NQI.life. NQI.life. I'm actually, the site's up right now. I'm bringing on a third party to do a big update and to make it a little more functional, because we just opened it up 2.5, 3 years ago. And we've had a lot going on the last 2.5, 3 years with life and business and everything else, but it's time to ramp that back up. But clubcapital.co and NQI.life. And my phone number's on both of those. My cell number is. So I pretty much answer my phone 24/7 since I'm an empty nester now. So it's me and the dogs. So I enjoy getting a phone call every now and then.
Yeah, awesome. Well, thank you so much for taking time out of your day. I really appreciate you coming on, and I've enjoyed our conversation. I know our listeners have also, but we'll look back to circling back with you in the future and see what you got going on.
Likewise, Steve. Thank you so much. Enjoyed it.
Thank you so much. Have a great one. Aloha.
Good. Yeah.
Great conversation with Darin Davis down in Austin. Lots of great insight. People that have had some time in the business, both in entrepreneurship and in life, always feel have tremendous amounts of value to offer. And so we just have to be willing to listen, to have those conversations. We had so many great insight there. And hey, kind of bottom line, guys, go out, take action, take action. Obviously, with their health experience, a health challenge, I think that's an amazing question to ask yourself. If you had to, could you take a year off if you had a loved one go through something significant, where you could go and be with them? Would you be okay financially, or would everything go to the wayside, right? Would you not be able to sustain that or survive that rather? I think it's a great question to ask. And we all should be asking ourselves similar questions. Whatever kind of motivation that you need to kind of get moving, I think that's always going to be something valuable. Guys, if you're interested in investing with us, go to trustedequity.com. You can learn more about prior projects, what we've going on. You can learn more about the team or schedule a call. If you want to join us here locally in Honolulu, we have our monthly group that meets, Honolulu Multifamily and More. We've got a thriving community here that meets up every month. We'd love to see you out in person, shake a hand, and get to know you a little bit, see how we can provide you value if you are on island. And then we also love if you're finding value, if you're enjoying the show, make sure that you're sharing it. We need continued feedback, and we need more people to listen to the audience. It can have some life-changing impact to them. So please make sure that you are sharing the episode, sharing the show. We'd love 5-star review as well if you did find value. And we look to continue to bring you more value, guys, in the future. All right, go out and take some action, guys. That's going to be it for today. We'll see you on the next episode. Aloha.